Okay, so this is a teaser for my upcoming book. Based on this chart, I'll read it to you because you can't really see it. Maybe you can. Anyway, okay, so I have 4 income classes that I use. The top 1/10 of 1%. Yeah, that should be point. Then the 1/10 of 1% to 2%, 2% to 20, and the bottom 80. So if you look at the debt, so the bottom 0.1%, you got to have $3.3 million a year to be one of them. To be in the 0.01 to with the 0.1 to 2%, you've got to have $439,000. In other words, anything above that is what Joe Biden used to call the upper middle class, and below that was the middle class. To be in the middle class, you have to have $117,000, and that's what being that puts you in the top 20%, and everybody else you just maybe 40,000 or nothing. Either you pay no taxes, get all your money back, or even if you pay 40, you probably get all your money back. So let's go to this is not a per capita. This is a per capita per class. In other words, I don't go with per capita debt. What I do go with is per cap. I adjust the debt by the size of by what you owe in taxes. Okay, so if you owe right now, the ratio is 13 to 1. So if you pay $1 in taxes, you owe 13. So if you pay nothing in taxes, you owe nothing. Okay, but I'm doing within class averages. Although most of the people owe nothing. If you're paying anything at all, you make 40. So it's not. So it's actually my numbers are a little high, really, or a little low for the lowest class. But so the per taxpayer share of the national debt within the range. It's in that range, in the highest range, the 0.1 is $39 million per family, or if in a family of 4, that's $9.8 million of debt per individual. Again, that's 9.8. It's $10 million essentially. If your parents make over $3 million a year, you owe $10 million of national debt. Okay, so for the top 2%, minus the really rich, you owe $2.8 million per family, or $700,000 if you're a member of a child or adult or wife or whatever. $700,000 you owe. That's your debt obligation. That's if you make over 43.9 or 439,000. You're considered wealthy by Joe Biden, and or upper middle class. Let's say people like that think they're in the middle class. They're in the upper middle class, which means they're not in the middle class. They're in the lower upper class, but upper middle class is how we call it. Okay, so if you're in the top 20, below the top, if you make between 117 and 439, your family debt, your per taxpayer debt is $370,000 per man, woman, and child. Assuming you got a family of 4, it's $92,000. That's your share of the national debt. If you're in the bottom 80%, $61,000. That's all. That's for the family. Or $15,000. So if you're born to if you were born into most families, those who make under $117 a year, you come into the world owing $15,000 of the debt. If your parents are middle class, that's above 117. If you're not making 117, you're not in the middle class. You're in the working class. You come into the world with owing 92. Again, now that's That's before assets. This is the fun part. Because there are three kinds of assets. High yield assets, which include bonds, bond funds, mutual funds, U.S. savings bonds, which have become a high yield asset, in that the top 10% own 77% of them. Okay, you'll see how this is going to go. So then there's the long-term assets. The top 10% own 55% of those, and they increase. I calculate that they increase by that percentage up through the ranks. Okay. And then there's Social Security, trust fund, and that's pretty much. There are some people who make more. It's it's all in some per capita thing. It's you don't get any more or less, although white people do get more because they are a lot more likely to live, less likely to die early, or live for a longer time in retirement. Having a low wage career doesn't for some. I mean, some people they live a long time, but some people, on average, black people die younger because they have worse jobs because we have racism in the United States, if you haven't heard. Okay, so now let's look at the averages. Let's look at the amounts in each class after you include the assets. So this is the net. So if you make over $33 million a year, then net of assets net of debt, you own, meaning the national debt process and tax process owes you $19 million. Meaning if everything in the national debt, the assets that or the bonds that guarantee the assets leverage-wise, and even the government debt, assume it's splittable. You pay that up, but you then charge for what you owe in the national debt. Again, it's $19 million per those 150,000 families who are in the top 1%. So change that. So that's if you're in the top, if you're a billionaire, you're born with $4.75 million. That's what the government owes you. You don't owe the government that. The government owes you that money from the debt process. Think about that. The government, if you're in the top 1.1% of the population, the government owes you. You have assets when you're born from the United States. It changes rather quickly. So if you're below that if you're in the 0.1 through 2, then your family owes $1 million. After you sell your assets and then they take out the debt, you still owe $1 million for your family. And there's no national debt, so you actually have to come up with money. That's or about it's a little over $1 million, so it's 271,000. If you're born and your family makes $439,000 but less than 3.3 million, on average, you come into the world owing $250,000. Welcome to Earth. Okay, what about the middle class? Your family owes 31.7 thousand. That's a little better than $1 million. That's the middle class. That's 2% to 20%, or 20% to 2%. That's 79. That's 7.9 thousand. It's $8,000 that you owe when you're born. Good morning. Oh yeah, here's your bill. So we don't actually do that because the debt guarantees capitalism, and if you don't own any national debt, then there's no capitalism. If you don't own any national debt, there's no capitalism. So then you're part of a socialist cooperative, or you're living in the street. One of the two. Right now, though, there's no, until we have cooperative socialism or democratic cooperativism, it's the same thing, actually. Libertarian socialism, it's all the same thing. We just like to use different words to get, different audiences, different donors. For those of us who do economic writing, we actually don't make any money by what we're doing unless people pay us. Which is why a lot of organizations worry about Social Security. And here's the thing. This is the last group. The people who they make under $117,000 a year, which is, if you're watching this, it's probably you. Okay. Your family does not make $117,000, because if you're in the bottom 80%, you're not in the middle class, you're in the working class. You may be middle income, but you're not middle class. There's a difference. There's a huge difference. So, but here's the good news. Your family, if you don't have much, you don't have anything really in long-term, you have some long-term debt, because that includes cash too, but you really don't have much in a checking account. I mean, you're pretty much close to the wire. Because banks, the other long-term investment is banks. It's banks, life insurance, retirement funds, pension funds, and Social Security. Your share of the Social Security debt, or trust fund. So your family has 16.3 thousand, most of that Social Security. So when they're talking about when the upper class is talking about the need for Social Security to be solvent, what they really mean is that, they will increase your money, but they will increase your taxes to get that money, or cut your benefits to get that money, so that, you will build your trust fund, but it's on the backs of you. Because the people who make over $117,000, for that money over $117,000, they don't pay anything. And they don't really get anything either. But if you're born and you're a member of the working class, you come into this world with $4,000. That's most babies born today. All but 4 out of 5 babies today in the financial system that we have, when they wake up, assuming their father dies or their mother dies, take their mother out when they were born, they will get survivor's benefits worth $4,000. Or they're worth more than, they get more than that. But their share of the national debt that they will keep, even if they're getting benefits, is $4,000. It doesn't get spent. They still have that. That's the way insurance works and taxes work. But if we liquidate everything, you get $4,000. That's your share of America. That's the top 80% of people, black, white, Indian, Chinese, Asian. Notice I said two, because Chinese don't consider themselves Asian, they're Chinese. I used to live with a Chinese woman, and they made it very clear. Asians are people who live in Malaysia, or Japan, or actually Japanese people don't call themselves Asians either. They call themselves Japanese. If you have any doubt, see Crazy Rich Asians, and some of that it's about people who are in Malaysia, Indonesia, but your assets that produce wealth, if you are in that group, you have $4,000 of assets producing wealth for you, for your income, for the future, for the rest of your life. You should like the current financial situation, except that the people who shouldn't like it are the people who make between $117,000 and $3 million. they own less than they owe. You know how to fix that? Because it's, remember, what you owe is based on what you pay. And, you know, for the top 0.1%, they don't pay a lot of, they get some dividends. It's not inconsiderable. They don't get much in salary. Most of their income is capital income. Capital gains. They get capital gains. The capital gains tax rate is 20%, which is half, almost a little more than half what they pay for what they don't get. Remember, oh, we'll see if this loads. So, yeah, that is life in America. If you make too much, if you make under a quarter, I'm looking at the time and it's messed me up, and I don't want to read through the whole video, so I may delete this and make a second video, or they may let me load a over 16-minute video. So if you don't mind watching me being verklempt for a second. So if you're wealthy, you have over $3 million a year, and you get that. Usually you're getting capital gains. You're selling stuff. You have some income from like partnerships, and you have some, you know, like a third of your income, and some from profits. But mostly it's capital gains, buying and selling, or inheriting, and you pay it. Playing the market, playing the casinos. I mean, so we're talking only 150,000 people here, but they have a huge amount of money. So, you know, when they have mutual funds, and when their mutual funds make money, yeah, they don't have to pay, they don't gamble directly. They buy into mutual funds. Then the quants on Wall Street, they play with that money and make a profit. And you know, you get those as gains. They're reported to you as gains at the end of the year, and you have to pay taxes on them if they're short term. If they're long term, you don't. They give you amounts. So, but yeah, it's millions of dollars per year. You know, if you're the child of one of those families, that means you get $500,000 from your father's accounts, or $600,000 from your father's accounts. No, that's $800,000 from your father's accounts if you are in the top 153,000 tax-paying families. Not bad if you can get into that rare air, but you likely are not in that red area if you're watching this rare air if you're watching this video. So we'll see if all of this loads or if I have to do this again. Have a nice night.